Hi everyone, it's Sunday, May 3rd, time for another HideNet Week in Review. I'm Vera Dordick. So this week saw some glimmers of hope with regard to business restarting in various areas across the globe. In some places, the focus has been on manufacturing, and in the U.S., the restarts have included more widespread sections of the economy in some states. But let's start with Europe this week again. Editor Andrea Guolo notes that the wet tanning end for export started this week in Italy, along with some other parts of the tanning business. And while the general manufacturing restart is phasing in on May 4th, tomorrow, some sample production already began there this week. You'll note we have a different graphic up for this week, and this is the trend chart for the past 3 years for northern German bulls. So I wanted to show you that you can see the decline that set in with the pandemic-related closures and how this has derailed an otherwise stable market. The reference prices in the bull market this week were stable, again, with northern German bulls 30 to 39 kilos coming in at 75 cents in euros. The 40-plus southern German bulls were also steady at 85 to 90 cents. For cows, Andrea says it was a transitional week in Europe and that prices were stable for those selections too. In the UK, while the reference price for British ox was unchanged at 70 to 75 cents per kilo in sterling, the Irish ox saw its prices weaken a bit to 65 to 70. Andrea devotes his analysis this week to look at how tanneries are managing the restart and how the situation is currently affecting the outlook and plans for the upcoming fashion seasons. Turning to the U.S., prices remained stable. Meat plants were still having difficulties related to COVID-19 infections and closures, along with cut downs of production. And this is despite the fact that the president issued an executive order that they stay open. So directive or not, many workers are still fearful about returning to work given the close quarters in the plants and the lack of testing in the country overall. With regard to hides, some business was done, but it was not a very busy week, according to sellers. They didn't have to take low bids since most buying is still speculative and customers weren't amenable to paying more right now. Besides, Friday saw the start of a 5-day break in China for the Labor Day holiday, and so most of those customers will be off until Tuesday at least, maybe longer. With regard to prices, regular weight heavy Texas steers was steady, with trading again reported at $16 for seasonal weights. With regard to slaughter, it was another record week of low numbers at 425,000. Again, the big drop is because of the reduced operations at the meatpacking plants. So with regard to exports, the number this week obviously declined as packers had fewer hides to sell and their positions were extended by the low slaughter. Total raw and wet blue hides sold was 450,100, and that's down by 42% from last week. More than 3/4 of the material, as far as raw hides were concerned, were purchased by China. Combined shipments were up over the previous week by 11% at 470,200. In our observations this week, we look at managing the negatives in the market and why the downside risk is probably greater than the upside potential right now. From South America, editor Ronald Guiel reports from Brazil that prices were stable for the week. Fresh hides were unchanged and are selling at 49 cents in reals per kilo, which is still about 9 US cents. TR1 was also unchanged at 57 cents per square foot. Prices in Uruguay were still stable. Among the other news stories from Brazil, we have reports that JBS and Marfrig plants are operating normally in the country, as well as a story on Marfrig's profits for the first quarter. From elsewhere in Latin America, the biggest story is that representatives of the footwear industry in Argentina, Brazil, Colombia, Chile, Ecuador, Guatemala, Mexico, Paraguay, Uruguay, and Venezuela are all coming together not only to generate a strategy for moving forward toward normalcy, but also to protect their domestic industries from cheaper Asian imported shoes. That's because these are expected to increase because of all the pandemic-related difficulties in the domestic footwear sector throughout Latin America. So that's all the news we have for today. So until next week, good night from HideNet.